Uber and Lyft drivers across the world actually are striking ahead of Uber's blockbuster IPO later this week. The workers, those drivers, are lobbying for better pay and more transparency, among other things. So joining us now is New York Taxi Workers Alliance Executive Director Bhairavi Desi and Yahoo Finance's Akiko Fujita. Thank you for being here. I just want to read from the statement that the taxi union, I'll call it, the app drivers union put out, in which you said, Uber and Lyft are not viable. At their core, their business models are based on impoverishing workers. And they actually said, you pointed out in the S1 for at least Uber, the threats to the company's forward momentum in business are the fact that these people right now are not employees, they're private contractors.
Yes, and I mean, number of studies across the country have shown that in majority of the states, drivers earn below minimum wage. Now, they're also responsible for the vehicle, the insurance, the maintenance, and yet they remain at poverty wages, barely making enough to even cover their expenses, let alone covering their cost of living.
And what response have the drivers gotten from the companies when they've come before with their concerns? Because this is not the first time that we've heard about this.
Yeah, I mean, the significance of today, though, on May 8th is it is the first time there's been a global strike. And in New York City, we had a citywide strike of Lyft and Uber drivers. And I think that, this is a real moment of change for drivers as a whole, that things are, drivers are making it clear to these companies, we're not expendable, we're not replaceable. They can't wait to get us, they can't wait to get us out of the cars and go into driverless vehicles, but we're not a liability. Drivers are the people that built them, their empires, and they needed to be treated with respect and dignity.
I do find it interesting in Uber's filing that they actually did highlight that this is a risk factor, saying that they are actually going to reduce the incentives for drivers to try and improve financial performance. So having said that, what do you think is the realistic outcome to this? What specifically are you looking for?
Well, we think that, the money is there. They just don't want to see it spent on the drivers. There are high bonuses for many of their executives when that money could instead be spent on the drivers to earn a livable income.
I want to pick up, though, on what Akiko is saying. If these companies are not viable now when they're, as you say, impoverishing their part-time drivers,
right,
how are they viable if they get higher wages?
Well, I imagine it's one of the reasons that Lyft's IPO has been tanking, right? I mean, once the S1 came out, Lyft itself had said, we may never become profitable. And this is after they have kept their expenses low by, by not having any employment expenses for the drivers. They don't contribute to Social Security. They don't have to abide by minimum wage laws. There's no other contributions that they make. But that tide will change. And I think, part of the protest for us, today were to say to investors, you really need to think twice, because these, their business model will have to shift, or they're not going to maintain a workforce, and they're not going to be able to move into driverless cars, fast enough.
Well, let me pick up on that point, because while you say the business model will have to shift, the analyst point of view has always been that these companies will become profitable once they start to roll out the driverless cars. So right, in some ways, right now the business model works with the drivers, but the argument could be that, look, why shouldn't the focus be on that path towards the driverless cars, at which point they can make money without the drivers in place.
And that's what's so, for us, it's what's so problematic, and that's why it sparked this global outrage by the drivers. A few years ago, these companies saturated the streets with cars and drivers. Drivers paid for those vehicles. They did so that they could basically outcompete the taxi sector and other competing sectors. Now that they're moving, more quickly into driverless vehicles, they're basically trying to shed the number of drivers. You're just throwing people, into the abyss of the economy.
I want to ask you, though, a little bit about the changing dynamics of who is driving, right? First of all, I'm curious, how many of the Uber and Lyft drivers used to be taxi drivers, or how many of them have come newly to the industry, right? And what is the economics of an Uber or Lyft driver versus a taxi driver? Are they indeed making less than they would have?
Well, across the country, when Uber first started, they would always recruit the professional taxi drivers, people that knew the streets the best. They certainly did that in New York City. And then over time, once they built up that army, they started to recruit more part-timers. What I think in the beginning, drivers believed in that promise that working for Uber and Lyft would be better than driving a taxi. But what we've actually seen happen is what was once a full-time profession has now been turned into a part-time gig of poverty pay. Things have gotten much worse for drivers.
But how have they? Why? How? Like I'm having trouble understanding how that happened.
I mean, number of ways. First of all, they saturated the streets with cars, right? And so
they're competing between the drivers.
Competing, right? The drivers are competing against each other. There just isn't enough work. I mean, in New York City, 42% of the time, Lyft and Uber drivers are actually empty. There just isn't enough work there. And then on top of that, they started to cut the rate of payment for the driver. And so you're picking up less fares, and then on each fare, you're earning less money. Meanwhile, they encouraged you to enter into contracts to buy vehicles from their leasing partners. Those cars would cost drivers about $90,000 over a 3-year period. The Federal Trade Commission did an investigation and settled with Uber for $20 million for false advertising, where Uber had claimed that drivers would earn a certain amount of money. The FTC found that less than 10% of the drivers actually earned what Uber had promised. Meanwhile, they were all left in debt.
All right, we have to cut it there, but we appreciate your being here. Bhairavi Desai, New York Taxi Workers Alliance Executive Director, with a warning for people who might be about to jump into the Uber IPO about the future. Thank you.
Yes, thank you.